I think there'll be a lot of things cleared up, not only because of the election, Scott, but also because of some of the issues going into the G20, end of this month. Well, just over a week from now, in fact. I think that will clear up a lot of things, and I think that there will not be a settlement with China, but there could be positive movement. And that sort of positive movement, just the mention of that, gets the markets moving. It's done it time and time again for the last 6 months.
All right, let's get right to our newsmaker, Tom Lee. Your year-end target is 3,025 on the S&P.
Yep.
As you sit here today, are you standing firm on that?
Yeah, I think we've got a good shot of making that this year. Because one, there has been so much de-risking, on all the things that you guys are talking about. Plus, we're sort of taking some of that risk off the table with the midterms. We know positions like risk-on positioning is now net short for hedge funds. So I think it's easily a recipe for a big bounce.
But 10%?
Yes.
That's a very big bounce.
I think it would be pretty typical given the internal damage that we saw last week. We put out a note just pointing out that when you look at the percentage of stocks above the 50-day and 200-day, both in the S&P and Russell, it's only happened in 9 clusters since 1990, of which almost to the day it marks the bottom. The median return 3 months is 13%.
How about it, Steph? Too optimistic?
I hope you're right. And I hope the sectors that you like, I like the same ones, so I really do hope you are right.
You'd have to believe that the correction's over and that you get tonight out of the way and then you get a ramp into year's end. Does that make sense to you?
I mean, it does make sense. I actually think we have to get through G20. That's much bigger in my mind, because if you look at the rally last week, it was because there was speculation that Xi and Trump were talking and that they were kind of coming to a resolution or something like that, and the market took off. See, the problem with the G20 or the problem with China is that we just don't have kind of clarity on earnings for 2019. So to any extent, you can even just have a pause in the tariffs and in further tariffs. I think that would be viewed positively. So that's why I think we have to get through that. I think in terms of midterms, I don't really expect a huge response. I think we're all expecting a kind of a mixed Congress. And, okay, you can play some sectors, but I just don't think it's the bigger issue.
There is still a debate out there as to whether the correction's truly over. Josh Brown, do you think we've seen the lows?
Well, how could you say it's over when we haven't made new highs? Like fundamentally, you can't say it's over.
Tom Lee presents a point of view that we're going up 10% between now and then.
Man, I hope you're right. I have Hanukkah and Christmas gifts to buy. Let me tell you the way we see it. For 27 straight months, my firm's tactical asset allocation strategy was 100% fully invested in U.S. equities. That changed when October rolled over. And it's not to say that's a short-the-market call, but the environment has definitively changed for a lot of people running rules-based strategies, specifically if they're focused on things like trend, slope of trend, momentum, go down the list, internals. So here's the way I see it. Very weak bounce today for Apple, Scott. The stock was absolutely hammered, only up, 0.4% right now? That's a joke. Google looks terrible. Facebook looks downright awful. These are important stocks for the market. Consumer staples breaking out. Clorox making an all-time high. I think what the market is telling you, unless you think the market is completely wrong here, which you have the right to, the market is telling you is that we are not out of the woods. Decent bounce in financials. That's pretty much the best I could say for right this moment.